Gunjan, I want to start off with you because we were talking about the reversal that we've seen in commodity prices, and it's been absolutely stunning, even though they still remain very high. But some of them are as much as almost a third off of highs just hit in the spring. The question, though, is why are they down that much? Is it recession fears, or is it that inflation is actually rolling over? I think that's sort of one debate that's going on in the markets right now.
That's right. I think that's the biggest question out there. I think so far, though, investors are clinging to this as kind of a glimmer of hope that inflation is coming down or coming off of its highs. We're seeing everything from copper to lumber to cotton to even oil off of their highs. And I think that is a positive sign for markets right now. And I think that's one, glimmer of hope that investors are kind of clinging to right now. And so far, the stock market has been pricing in a recession, essentially, with its big declines this year. But what we've seen recently is that some of the extreme pessimism that we saw in the market has kind of receded lately. For example, short sellers pulled off of or eased off of some of their extremely bearish bets on the market in June, and short selling activity was off of the highs seen earlier in the year. So I think investors are hoping that maybe, just maybe, the worst of inflation is behind us.
Greg, I don't know if you characterize yourself or you put yourself in that camp of one of those people who really, felt really negative about the markets. It sounds like it. It sounds like you were calling for persistent inflation throughout 2022, and you're calling for a very difficult earnings season still. Yep. Do you see this sort of reversal in some of these commodity prices as a transitory pullback in inflation, maybe, or do you think that there's a glimmer of hope here?
No, I think that this is just anticipatory, and the pullback in some certain commodities, particularly copper, is just forecasting a global slowdown. I think that we can be confident in that because at the end of the day, I think energy pricing is about to get more acute. We talked about the weaponization of energy in Europe, where Russia has cut 60% of its output in Nord Stream. We have strikes going on in Germany and Norway, which will make the price of natural gas more acute. And in a higher energy price environment, I think that you're going to see some of those commodity prices come back up, not to mention what it's going to do to some of the industry in Europe, particularly as we enter that winter heating season. Now, as far as the market reflecting a recession, I don't think it's doing that at this point. I'm at 195 on the S&P. You put a 17 times multiple on that, and that gives you about 3,300. That's only mid-single digit contraction. Typically, in a recession, you have 20% plus contraction in earnings.
Yeah, so we could have a lot of wood to chop in terms of estimates coming down, Gunjan. And I think that's sort of the concern going into earnings season, that even though analyst estimates have come down, they're still too high. And so even if we do have this sort of, at least right now, a reversal in commodity pressures, we've got some glimmers of hope when it comes to the supply chain because China has reopened. But companies aren't going to be rewarded for being really optimistic and then having to pull that back later on if these things don't last.
I think that is a big fear out there. I mean, take a look at what we've seen from executives at Restoration Hardware, Micron. There are fears that we're going to get more of those warnings about, a slowdown ahead. But I think that's what makes this week incredibly key in terms of the jobs report that we're going to see this Friday, because all anyone on Wall Street and Main Street can talk about right now is a recession. People are just freaking out about a recession. But so far, some of the economic data just does not point to that. The jobless rate has been pretty steady, and economists are expecting it to stay steady at around 3.6% later this week. So that, as the Journal has pointed out recently, that would make it a really unusual recession because the jobs market is still incredibly strong. So you have all these mixed signals to parse out there right now.